Hi, welcome back, and in this video I want to talk about order flow trading, and again links to a Substack article that I wrote, so if you want to sign up for the free newsletter or see this particular one, look in the description below. So order flow trading has become quite popular, particularly in the futures industry where it is possible, and I should say here that it's far harder for retail traders or traders at home to trade in an order flow style on most equity contracts, particularly in the US, and impossible on FX and CFD platforms. Okay, we need to trade directly against other traders, which you generally don't do on, for example, US equities, where they get routed through a market maker. So I'm really talking about the futures market here. So order flow trading has become, over the last 5 to 10 years, a bit of a buzzword in the futures industry. Seemed to be a step up from traditional futures trading methods such as technical analysis. If you've been around the futures industry for any length of time, you know that most technical analysis futures traders lose money. So there was a kind of like a niche, a void of what do better traders do. People knew that floor traders and more professional traders traded in an order flow manner. So a whole bunch of people started to sort of offer order flow courses. But a lot of those courses and a lot of what people now think is order flow is not order flow trading. So I just want to talk here and in the newsletter to sort of give you an idea about what is order flow trading and what order flow trading isn't. So like everything in this industry, when there is a void, there's also a lot of bullshit that comes into the industry too, and people saying things that, and then it gets confused, right? After many years of people saying something, it becomes sort of accepted wisdom, even if it's not true. So order flow trading, in its purest form, it is literally trading in and out of various orders in the market. And generally, order flow traders will want to pick off weak orders, the weakest traders. That is, in its purest form, what order flow trading is. Trades will be held for literally just a couple of seconds. You want to be in and out as quickly as possible. That is purest form order flow trading. So if you're aware of what some of the conversation out there in order flow trading, you'll already start to realize that some of what's packaged as order flow is not order flow. But as I said, you want to be in and out quickly. And another key theme of order flow trading is it must incorporate some analysis of liquidity, the liquidity in the market, and that again will eliminate a lot of what people say is order flow trading. If you think about it, the name order flow, the flow of orders, it suggests there must be an incorporation of liquidity of the what's on the bids and offers and what orders are coming in and out of the market, and by that 100%. If you are a real order flow trader, you really need to understand liquidity. As much as anything, it is a study of liquidity, and that's what you're trading. Again, that will eliminate lots of other order flow techniques, which we'll get to again in a bit. If you think about, for example, a well-known example, so Citadel, the hedge fund, we know buys the order flow from a number of sites, including Robinhood. Now, if we think about what they do, they want to be in and out of that order flow. It's analyzing they're taking weak orders. They know they're all retail traders. Again, like I said, order flow trading, you're trying to pick off weak orders. And another really key aspect, which will fit into what Citadel are doing as well, is that an order flow trader can trade at any price. Okay, he's not interested in levels as such and waiting for certain levels. An order flow trader, if the liquidity and the orders are right at the right time, can trade on any price. And if you think about Citadel, when they're buying the order flow of retail traders, they don't buy that order flow and then sit there and say, well, we're only going to trade if it hits certain prices and certain volumes and that sort of thing. That's not what they do. They can trade on any price. Once you know what a weak order is, you're happy to take the other side of it. So order flow trading in its purest form, does not incorporate using levels or volume profile or these sorts of things. You are able, using market maker skills, to get in and out of the market unseen usually, and you use weak orders to do that. So that is what order flow trading is in its purest form, and it must have a view and an analysis, of liquidity. Okay, it's really important. If it's not analyzing liquidity at the trade, then it's not really a form of order flow trading. And that means, if we think about it, what styles of trading are not order flow trading, but are thought to be. So if someone said something to you and it uses levels, particularly past levels, levels, that's not order flow trading, okay? That really is just a packaged up different version of technical analysis, okay, using past data. If you think about it, if order flow trading means you must be incorporating liquidity, it must be the liquidity at the time of the trade. So a past level, a past, price level from half an hour ago, an hour ago, that's not using the current liquidity, okay? So what we do must incorporate the current liquidity. So past levels, that's really just another form of technical analysis. So that's quite important. If a style uses charts, if someone says to you, this is my order flow method, and they're using charts and drawing lines and method and sort of levels and stuff, that's not order flow trading. That is 100% still technical analysis. So as I said, if a previous volume area or something is the main tool, the main indicator for what you're being taught, that's not order flow trading. That again is just a varied form of technical analysis, really, and more of a predictive method. If the style you're being taught means you're holding a trade for longer than a few seconds, it's not pure order flow trading. Again, it's more of a position trade and probably more like a technical analysis style, okay? Again, think about it. So if liquidity is an important point, an important part of the trade, then if you're holding a trade for 5 minutes, 10 minutes, half an hour or so, you have no idea what the liquidity is like when you exit the trade. So therefore, liquidity is only a minor aspect in what you're doing. It's not pure order flow. With the Norden method, for example, we're in and out of trades in a second or two. We know, exactly what the liquidity is, or pretty much what the liquidity is when we enter, but we also have an extremely good idea what the liquidity will be like when we exit, because we're exiting within a second. So in that way, we actually analyze the exit before we've even entered. It's a key part of when I'm teaching people of my course, is that you have to analyze the exit before you've even entered. You have to know whether you can exit before you've even entered. That's a really important part of the Norden method, and it's one reason why you can improve your success rate, because you know that if you enter a trade where you're going to exit in half an hour's time, for example, I have no idea what the liquidity will be like then. Maybe easy to get out of a trade, maybe hard to get out of trade, let alone I have no idea where the market will be in half an hour's time. Whereas in and out straight away, I know exactly where the market is now and where it will, a very, very good idea where it will be in 1 second's time. So anything where there's a predictive element, I need to predict where liquidity in the market will be in 5 minutes, 10 minutes, half an hour time, is not pure order flow trading. So this topic, as you will see, if you've read things about order flow trading and you've seen out there what's out there on it, you already start to see that a lot of what's incorporated in order flow trading out there in the retail world isn't order flow trading. So I think it's really important to try and get the record straight, to understand that a lot of it is just another form of technical analysis using levels, just repackaged up and then sold as order flow trading. And that's a real shame, because order flow trading is a more professional style. There's a lot of benefits to it. And we know the professional traders use it, and it's just a real shame that there's a lot of things being sold as order flow trading that are not. So I hope you found this an interesting video. As I say, check out the Substack newsletter. There's some more information on that as well. And of course, subscribe to that and to this channel as well, and I'll continue to help.